TCS ahead of its numbers. It's holding up a good 2.5%. In fact, I'm going to quickly urge Darshita as well to join in and tell us what the ET Now poll is penciling in from TCS's performance, because, time and again, one has seen a similar trend play out wherein most of the IT trades turn out to be more of a buy on rumor, sell on news kind of a story, and post earnings, most of these stocks do actually tend to cool off. But Darshita joins in to tell us what we can expect from TCS's earnings. More importantly, what is it that we need to look out for from the commentary going forward about how much of the weakness is now in the price, to try and estimate that, and what really lies ahead for the IT bellwether. Darshita?
Right, TCS is expected to kick off the IT earnings season on July 9, and while the revenue is expected to remain broadly stable, the spotlight will be on the management commentary rather than the headline numbers. Street estimates suggest that the dollar revenue could remain largely flat sequentially at around $7.6 billion, while the rupee revenue is expected to rise nearly 2% QOQ, aided by currency tailwinds. However, the profitability is likely to come under pressure. EBIT margin is estimated at around 23.9%, which is down 141 basis points sequentially, largely due to the annual wage hikes. Now, if the margins come in around these levels, it would mark TCS' weakest first quarter margin in nearly 11 quarters post Q1 FY24. All PAT is expected to decline by about 3% sequentially. Now, beyond the numbers, the investors will closely track whether management optimism on FY27 is beginning to reflect in the business performance. Constant currency revenue growth is expected to be in the range of flat to 0.3%, suggesting demand remains stable but not yet robust. Another key metric will be total contract value, which is expected to come in around $9 billion to $11 billion. Now, a strong deal pipeline would reinforce the confidence in the medium-term growth outlook. Management commentary on the macro environment, particularly in the BFSI segment, discretionary spending trends, and international demand will be critical. Investors will also watch for updates on the TCS AI business after the company reported the AI revenue run rate of $2.3 billion in the last quarter. While the wage hikes are expected to weigh on the margins this quarter, continued investments into the AI capabilities and AI-led pricing pressure remain the additional headwind. So overall, this quarter is less about the headline earnings and more whether the early signs of the FY27 recovery stage are beginning to engage.
Yeah, exactly. The market, I think, is going to be watching with hawk eyes on what the commentary of the management is and how much of a revival do they actually see from the next quarter onwards. But we'll continue tracking